Today in Crypto. By Samuel Indyk. Investing.com. The price of Bitcoin briefly bounced back above $35,000 on Monday despite further regulatory scrutiny for the cryptocurrency industry. Over the weekend, the UK's Financial Conduct Authority banned Binance, the world's largest cryptocurrency exchange, from conducting any regulated activity in the UK. In the consumer warning, the regulator also advised people to be wary of adverts promising higher returns on crypto asset investments or crypto asset-related products. Bitcoin initially fell on the news, hitting a low of around $30,200 on Saturday before rebounding above $35,000 today. Cryptocurrency bulls will look at the bounce off the psychological $30,000 support level as further evidence that the recent sell-off may have run its course. Some have also suggested that increased regulatory scrutiny is proof that the industry is maturing. On the other hand, the regulatory clampdown in the UK could be viewed as a sign of things to come, with the potential for further strict regulation from across the globe. China has renewed its crackdown on the cryptocurrency industry in recent weeks, with a focus on mining activity. Last week's action to shutter mining activity in Sichuan province helped briefly send the price of Bitcoin below $30,000. Technical picture. To the upside, a firm break of $35,000 could open the door to the 50 DMA at around $38,600 before a test of the all-important $40,000 level. A break above $40,000 could then lead to a test of the 200 DMA, seen around $43,600. On the downside, support is seen at $32,000 and around $31,250 before the $30,000 level comes into play. If a breach of $30,000 manifests itself into further selling pressure, some have argued Bitcoin could drop into the mid-$20,000s. One more push down to $30,000 might not hold given the number of times we've tested it and there's only so much liquidity there, said VJ Ayer of cryptocurrency exchange Luna. Post $30,000 and we should probably see $24,000 to $25,000, Ayer added. The price action of Ethereum has been similar, with the world's second largest cryptocurrency hovering around the key $2,000 level, but well below the all-time high of $4,300 hit in May. If you can't measure it, you can't manage it is probably the most cited quote attributed to Peter Drucker, who is known as the father of management thinking. While the quote is apocryphal, nevertheless it gained its place in the pantheon of business books because it highlights the importance of reliable metrics in making sound business decisions. In the crypto space, we are still missing one of the most important metrics: an official daily reference exchange rate. A reference rate is vital in allowing accountants to assign a particular exchange value between two or more currencies on any given date, even though those currencies may have fluctuated outside the specific time. The reference rate is a shared benchmark for companies, investors, auditors and regulators. Chris DaCosta is the founder of Totem Accounting, creator and driving force behind the implementation of the peer-to-peer live accounting protocol. Prior to Totem, Chris spent over 20 years designing and building enterprise accounting, business intelligence and enterprise resource planning (ERP) systems. Continue reading on Cointelegraph. Worldwide crypto investment has increased to over 19,900% over the years. The crypto investment surge came despite India's unfriendly crypto regulations climate. Indian citizens aged between 18 to 35 are now flocking to crypto. According to a Chainalysis report, the world's total crypto investment status has increased drastically to about 19,900% over the past years. Nonetheless, the 19,900% drastic surge happened regardless of India's unfriendly crypto regulation climate. Also, citing from the Chainalysis report, digital assets investments increased overwhelmingly in mid-2020. Right after this, the entire crypto market saw a parabolic surge and streamed into a new all-time high at that time. However, based on the report, India's investment portfolio has pushed from $200 million to $40 billion roughly in recent years. Not limited to this alone, Chainalysis has also stressed that almost 15 million Indians are now into cryptocurrency. In addition, commenting about how the Indian citizens are now flocking to This article was first published on coinquara.com. Continue reading on Coinquara. Large-scale clampdown of Bitcoin mining operations has sent the network's hash rate crashing to a 2-year low. According to data available on blockchain.com, Bitcoin's estimated hash rate has plunged to 58 TH/s, its lowest since July 2019. In the past 24 hours, the estimated number of terahashes per second, TH/s, of the Bitcoin network has dropped to 58,46 m, down from its peak value of 198,5 m on April 15. China's clampdown takes the blame. The recent crackdown on Bitcoin mining operations by Chinese authorities appears to be the primary driver of the crash in hash rate. Several Chinese provinces have taken action to crush Bitcoin mining in the country by banning large-scale mining farms. The anti-crypto stance has also seen regulators prohibit financial institutions from using crypto services. Following the large-scale crackdown on miners, major mining pools, including BTC.com, Poolin, and Antpool, have lost a significant percentage of their hash rate over the past month. Antpool's hash share has dropped from 12,48 A/s on Friday to 8,75 A/s as of press time, representing an over 30% crash. Furthermore, millions of ASIC miners have reportedly gone offline in China after official ordered electricity companies to cut supply to mining farms. About 90% of Chinese miners are expected to dump their rigs by the end of the month. Crush Crypto Promote Crypto. China has moved to enforce a stringent stance on cryptocurrencies. The nation has continued to make headway with its central bank digital currency, CBDC. Following its latest guidelines for blockchain development, the country is on track to have the world's most advanced blockchain technology by 2025. The Asian country is actively testing its CBDC through digital yuan lotteries across the country. A silver lining: while Bitcoin's price has remained under a lot of pressure due to the regulatory uncertainty from China, the crackdown is expected to dramatically reduce the concentration of the network's hash rate. To an extent, this will further push the decentralization narrative of the flagship cryptocurrency. And although Bitcoin is down by almost 50% from its all-time value, the recent development suggests that the digital asset can survive attempts to crush it by major superpowers. Miners are relocating to more crypto-friendly regions in North America, Kazakhstan, Russia, and other countries. There is the likelihood that Bitcoin's hash rate will recover from its humongous drop over the next few months. Continue reading on BTC Peers. Elysium has just announced the launch of the first-ever star-led XNFT platform. The launch is a huge step towards changing the landscape of fan engagement. The platform has already secured over 30 stars with millions of fans. Blockchain-powered Elysium has just announced the launch of the world's first star-led experiential NFT, XNFT, platform. The social ecosystem is based on an engagement reward model for fans. The platform is a huge step toward changing the landscape of fan engagement using NFTs, as has been Elysium's end goal. It enables authentic and meaningful interactions between stars and fans. As per the company's website, Elysium's value proposition builds from its incentives to stars through advertising revenue, sponsorships, and the sale of XNFTs. For celebrities, their fans can engage with them through content creation activities, challenges, and other experiences. As part of the platform's unique features, each star will have their own solar system where fans can enjoy exclusive experiences with them. In preparation for T. This article was first published on coinquara.com. Continue reading on Coinquara. Hit the like button and subscribe to the channel.